Welcome to Signal to Alpha, your essential market briefing. I'm Lady Muriel, cutting through the noise to deliver what moves markets today. Let's get you your alpha before the opening bell. Three major themes driving markets this Sunday. Intel is making a massive capital raise after a stunning rally. Israel's defense buildup signals opportunity for contractors, and central banks are quietly stockpiling gold at record pace. Let's break down what matters for your portfolio. Intel is seizing the moment with a $15 billion stock offering after shares have surged 400% over the past year. The chipmaker is capitalizing on what it calls strong and sustainable demand in the artificial intelligence era. Intel specifically cited growth opportunities in physical AI, custom chips, and advanced packaging as drivers for the raise. This is classic opportunistic financing. Sell when the market loves you. For semiconductor investors, watch how Intel deploys this capital. If they're investing in fab capacity and AI infrastructure, that validates the thesis that chip demand has legs. But $15 billion is serious dilution. So existing shareholders should expect near-term pressure even as the company positions for long-term AI growth. Switching to defense, Israel just took delivery of the INS Draken, a Dolphin-class submarine built by Germany's ThyssenKrupp Marine Systems, valued at $634 million. This is the most advanced and expensive submarine ever delivered to the Israeli Navy, and the largest built in Germany since World War II. The timing matters here. Israeli security expert Dr. Ehud Eilam notes, the larger submarine allows Israel to increase missile range to reach targets throughout Iran, without requiring closer approach or risky transit through the Suez Canal. This is second strike capability, the kind of doomsday insurance that nations pay top dollar for. For defense investors, this signals sustained spending from Israel and likely accelerated procurement across the Middle East, as regional tensions stay elevated. ThyssenKrupp Marine Systems and other advanced submarine contractors should see strong order books. Now, the sleeper story that could reshape portfolios. Central banks are going all in on gold. A World Gold Council survey shows 89% of central banks expect global gold reserves to grow over the next year, with a record 45% planning to add to their own holdings. The reasons are clear. 90% cite gold's performance during market crises, 84% view it as an inflation hedge and store of value, and 83% want portfolio diversification. Major buyers this year include China, Poland, Uzbekistan, Kazakhstan, the Czech Republic, Chile, Jordan, and Ghana. Here's the kicker. 74% of central banks expect the US dollar's share of global reserves to decline within 5 years, while gold's share is anticipated to increase. This isn't just emerging markets either. Individual investors are holding on to gold despite record-high prices rather than selling. When both central banks and retail refuse to sell at all-time highs, that tells you sentiment has shifted from speculation to insurance. For investors, this validates gold exposure as a long-term strategic holding, not just a tactical trade. That's your signal to alpha for today. Subscribe for tomorrow's essential market briefing. Trade smart, stay informed. Check us out at capitalcopilot.io.